Transhex has been in the diamond mining industry for nearly 50 years and was originally incorporated in South Africa as Buffelsbank Diamante in 1963. And in May 2011, Transhex signed an agreement together with its investment partners to acquire Namaqualand mines from De Beers in a deal valued 225 million rand. Transhex has a market cap of 308 million rand and a price to earnings ratio of 1.5. We don't give Transhex enough attention in the South African investment space. Is there a reason?
Yeah, it is a little bit like what happened is in the old days, like 20 years ago, the diamond sector was quite vibrant. You had De Beers at the helm, and then you had a number of other listed entities. Basically, one by one, they've all fallen off the wagon, and Transhex is a sort of last surviving player. But you can see there from its market cap, pretty small. It's been a very unreliable performer profit-wise. Its assets now are mostly alluvial diamond works in the kind of Northern Cape area. By alluvial, I mean diamonds that are lying around the river systems, and also coastal, because those are the diamonds that got kind of washed down the river systems. And then they've expanded into Angola, where they've had some mixed success in terms of getting some interesting looking stuff, but then prospectivity has been mixed. Now, this last deal that you alluded to there, the De Beers guys wanted to flog off some of their second-tier assets in Namaqualand, but unfortunately, in the process of doing the deal, they discovered that there's some quite significant environmental rehabilitation claims, because these days you can't just walk away and leave the mine cocoa pans lying with the wheels facing up. So that now has been the subject of a negotiation between the two.
Anthony, I apologize. Sometimes I find it very difficult to keep him quiet, but Transhex is your story now. If you look at the share price action, it looks very similar to one of the retail graphs. Well, it looks very similar to Fortini that we put up a second ago.
Except you're missing the big fall off over here. I think if you're an investor, you require a strong stomach. As Paul said, they operate in Angola, where they've already had 2 of their mining rights revoked. Their sole operating asset, they're trying to de-risk that by inviting third-party funds. So, you know, they operate in some pretty tough environments. And as we said, you know, demand for rough diamonds is erratic. Yes, I saw the share price did react this morning on positive news that they are inching closer to the deal with De Beers. But again, you're not only owning a mine, you're also owning part of a rehabilitation liability, and you know, diamond mining.
And with that, the risk just increases.
Yeah, you know, diamond mining does scar the earth, and not all holes are as enduring as the Kimberley hole.
Very well put. I wish you were ending the show.
Nice turn of phrase there. Look, if you did want to go into sort of speculative diamond, you could buy Letseng, which is Gem Diamonds, which is Clifford Elphick, ex De Beers guy, but that's listed in London. So there are other ways of being involved with sort of speculative diamond plays that have other exposures.
Hot or not?
Not
Paul?
hot for me.
Hot or not?
Not hot. I think it's good to see the stock they will make a profit this year after turning a loss last year. I don't like it for its volatility, but there are investors that actually do like stocks with optionality.